In today's episode of the MSA Rental Market Update, we are looking at the Des Moines rental market for conventional multifamily properties. As you can see on my map, CoStar has outlined the metro statistical area for Des Moines, Iowa, and where it is in location to Omaha, Nebraska, Kansas City, Missouri. Here is St. Louis, Missouri. We got Chicago and Milwaukee up here. That gives you an idea where it's located. Let's go into our filters and see, as usual, that we have excluded all corporate, all military, all senior, all vacation, and we are only including market and market affordable so that we are only looking at conventional apartments. If we go to location, you can see that we are in market, metro statistical area, and Des Moines, Iowa. So let's go take a look at the analytics and see what the analytics tell us for all three asset classes combined. So here is our supply snapshot for the Des Moines metro statistical area. There are 1,345 properties in the market, totaling 57,973 units. There are currently 2,060 units under construction, and in the last 12 months, 562 more units were rented than went vacant. That is the definition of absorption. We can see that there's been a slight tick up in vacancy rate, albeit not much in the last 12 months, from 6.2% to 6.7%. And we have a year-over-year rent increase from 1037 to 1079. As usual, we are not looking at the capital market. We are only looking at the space market. If we come down and look at our long-term occupancy average over the last 22 years, we can see that the market likes to be around 92.5 and is currently sitting around 93.25. So above that long-term occupancy average. If you stay around and wait till the end of the video, I will plot where this market should be placed on the market cycle chart. So that said, let's go take a look at the data and see what the rent analytics tell us for all three asset classes combined. So here is the rent analytic data for the Des Moines, Iowa metro statistical area. As usual, we do not look at asking rent. We don't care what the owner is asking. We only care what they are collecting. If we look at the first quarter of 2022, it was at $10.23 a month, went up to $10.47, stabilized at $10.46, slight uptick to $10.52 in the fourth quarter, and a slight uptick to $10.60 in the first quarter of 2023. Let's see what deliveries and absorption tell us. So we look at first quarter 2022, 464 delivered, 328 absorbed, 112 delivered, 297 absorbed. So we've got good, strong absorption really for the first three quarters. When we get to the fourth quarter, we notice that we have 228 delivered and 374 more went vacant on top of that 228. So negative absorption. Interesting that we saw a rental increase even with the occupancy decreasing. And then we had 164 deliver in the first quarter and 163 absorb. So back to strong absorption after that abysmal fourth quarter for the Des Moines, Iowa market. And we can see that the occupancy stabilized at 93.2. So sitting just slightly above that long-term occupancy average. So that's what all three asset classes combined tell us. We've seen this in the upper Midwest quite a bit. Let's go see what the Class A story is saying. So here is the rent analytic data for Class A properties. There are 51 properties in the market, totaling 8,079 units. Looking at effective rent in the first quarter of 22, it was at $12.35, went up to $12.77, down to $12.70, stabilized at $12.72, and then up to $12.90. Let's see what deliveries and absorption tell us. So we had no deliveries. That tells us that all the deliveries that we saw in all asset classes happened in Class B. So it's interesting that they delivered no Class A units. We had good, strong absorption with no deliveries in the first two quarters and then negative absorption in the second two quarters, which is where we saw the downtick in trend in rents. Noticed that we had where'd it go? Effective rent, $12.77 to $12.70, and then it ticked up to $12.72, which is interesting considering that we continued to go negative absorption. But then we had some absorption in the first quarter of 2023, showing that little uptick. So we went from 95.8% occupancy down to 94 and then up to 94.7. So that's Class A, somewhat following demand supply principles. Little interesting about that fourth quarter. But still, we've got really strong occupancy, so it doesn't surprise me. Let's see what the Class B is telling us. So here is our Class B rent analytic data. There are 447 properties in the market, totaling 26,303 units. Looking at effective rent, first quarter of 22, it was at 1089, went up to 1116, stabilized at 1118, went up to 1129, and up to 1134. Let's see what deliveries and absorption say. So in the first quarter of 22, delivered 140 and absorbed 215. Good strong absorption. Another good strong absorption in the second quarter as well as the third quarter. Then in the fourth quarter, 228 delivered and 107 went vacant on top of the 228. And then absorption returned in the first quarter of 2023 after having another 164 delivered. So we got some real weak absorption in the fourth quarter, yet we still had rent increases, and we're seeing this across this market. So it's almost as if the management companies weren't really paying attention to absorption. But again, we still have really good occupancy. Now, the occupancy is the lowest in the Class B that we've seen yet, and it is right at about that long-term occupancy average right now. So we'll see if it could continue to trend with absorbing units. Not bad in absorption. Good, strong 3 quarters. Really, 4 out of the 5 quarters, good, strong absorption, other than that fourth. So Class B not telling too bad of a story. Let's see what Class C is telling us. So here is our Class C rent analytic data. There are 798 properties in the market, totaling 23,499 units. Looking at effective rent, it had $843 in the first quarter, up to $854 in the second, stabilized at $853 in the third, stabilized at $853 in the fourth, and then up to $862 in the first quarter of 23. Let's see what absorption tells us, because we should not have deliveries. Even though we're showing some deliveries here, you do not deliver to Class C units. These were more than likely delivered to either Class B, or it could possibly have been an adaptive reuse on a much older building. So we don't really know that. There was quite a few downtown older historic properties that were restored in this market. So you got some potential there. But we're looking at some pretty weak absorption if it did deliver that 324. And then we had negative absorption in second quarter, strong absorption in the third, negative absorption in the fourth, and we're negative absorption in the first quarter. So even though we had rents that were increasing, stabilized, and continued to increase with no downtrends, we have been trending downward in occupancy. But once again, we are above that long-term occupancy. It does not surprise me that they are still trying to raise rents based on where the occupancy is. But we can tell that this market is showing some stabilization here as it gets to a point where it feels like they can come back to the market. There is a chance that some of these renters, now we were negative absorption in all 3 asset classes. So in the fourth quarter, we can't say that these renters went to B's or to A's, because they were all negative absorption as well, and C doesn't go to A anyway. So looking at this, it's just people either roommating up or getting out of the rental market completely, and either buying or moving away from Des Moines. I'm going to venture to say they probably didn't move away from Des Moines. It's a fairly strong market, but interestingly enough, seems to be still fairly strong, but showing some signs of weakness. So where would we put this on our market cycle chart? Well, we know that we are above this long-term occupancy average. I don't know if we could put it all the way up on this point. Honestly, I would feel comfortable putting it right here on this point. All 3 asset classes were basically the same, so we don't have to separate each asset class as to where it might be on the market cycle chart. So I would comfortably put them in oversupply. We're definitely seeing some cracks in absorption. Rents are stabilized. We had some break in the rent in Class A. We had no breaks in the rent in Class B. We did see some stabilization. Same with C. So I'm comfortable putting it on this point because we are above that long-term occupancy average in oversupply for the Des Moines, Iowa market. So once again, Des Moines, Iowa, in the upper Midwest, still performing fairly decent, not quite as strong as some of the other markets that we've seen in the upper Midwest, but definitely stronger than what we're seeing in the Southeast. So that does it for the Des Moines, Iowa metro statistical area. In our next MSA rental market update, we will be looking at Reno, Nevada. Now, one thing to keep in mind, you may have noticed I'm not really doing these every single day now, Monday through Friday. I think I did 4 last week. I'll try to do 3 or 4 this week. Things are getting a little busy for me, so I haven't had the opportunity to do them every day, but I'm still trying to do 3 or 4 a week, and we'll continue to do that for as long as we possibly can. So next video, whether it's tomorrow or Thursday, we will be looking at Reno, Nevada. I will see you on the next video.